Happy Friday, traders and investors. Friday, January 16th, 2026. Triple D and I have got quite a show here planned for you. We're going to talk a little bit about the SHIELD project, the Missile Defense Agency, the MDA's SHIELD project. People have been calling it the Golden Dome contracts, potential contracts, moving a few stocks out there. There are hundreds of contractors for this project. So we're going to go into some of the price action and a little bit of the details there. ONDS, ONDS, got a nice heads up yesterday from Brian D in the STN room that they are having an investor meeting today. Was it a catalyst for the overnight trade? We'll get into that in a little bit here. Regional bank earnings, including PNC, Regions Financial, State Street, MTB, KRE, and the regional banks. That's the regional bank ETF. One of Triple D's favorites for this year. We'll also preview earnings for next week. President Trump offering an energy auction for tech giants to pay for their power needs for AI usage. He doesn't want the cost of power going up for citizens, for consumers, because of our tech companies' need for AI. We're going to talk about why some of the stocks are moving this way, including GE Vernova, NRG, PWR, Constellation Energy, and the data center names, of course. The title of the show, everybody working for the weekend. We got a long weekend here. MLK Day on Monday. The U.S. stock market is going to be closed. We're going to see how Triple D is setting up his weekend trade, folks. And of course, rating the ratings brought to you by The Fly. We'll get into some notable ratings from today. Our guest at 8:35 a.m., Tony Pollock from Real Life Trading. We'll check in and we'll see how Tony has been doing. Let's get pre-market prep going here, folks, on this Friday.
The volatility right now is really incredible.
Wow, look at that consolidation on the upper right chart.
You know what we've seen this earnings season? Some of these expected moves get even more violent. And this is why I have switched my strategy 10 years ago. And if you're chasing, you're in trouble.
Folks, we got our trade station charts on screen here right now. Let me add the banner. These charts brought to you by TradeStation, folks. Chart, analyze, customize, all in one platform. Here's the rundown. Our price action here from this morning. SPY trading up about 0.1%. Let's check the Qs. Qs trading up 0.5%. Small caps and the IWM, the Russell ETF here trading up 0.2%. We'll check on oil, crude oil trading up also about 0.2%. Let's look at our precious metals here, including gold down 0.1%. Let's look at the flyer lately for the last few months. Silver down about 3% here this morning. And one more, Bitcoin trading up 2 or 0.3%. Thank you, TradeStation, for those wonderful charts. Let's bring in the Triple D trader himself, Dennis Dick. Dennis?
Yeah, silver just fallen off just in the last few minutes here. It's kind of been weak overnight, but just kind of took a pretty good dump here in the last few minutes. So precious metals, maybe some profit taking. I mean, the run's been incredible here. So moving a little bit lower. Brentster, lots of news here this morning. It was kind of a quiet after hours session, but we had a lot of news here this morning. And obviously, this is options expiration as well. We will have Tony Pollock on here, who's an excellent options trader, talking a little bit about that action too. That'll be at 8:35. But lots of macro headlines here again. Probably the biggest one. We got more companies and more awardees for the U.S. Missile Defense Program, which is the Golden Dome. Yep. And if you want to see, maybe you could bring up the list here, because there are hundreds of potential awardees here on this list. Mm-hmm. But, you've got, obviously, there you could go sam.gov, nice little site there, jump down, and you can click on the link here. So if you go all the way down for your Brentster, I'll just take you through it. Scroll down. Actually, I don't know if it's here.
Down here.
Yeah, it is. See the awardees?
Here it is.
Bang.
Yep.
So this came out last night. So if you look at who's on, then click into that list. There are some companies here like AeroVironment, probably expected to be on there. General Dynamics expected to be on this list. There's a number of other. There was already some awardees as well, so some other companies were already on this list. But this is more. Honeywell expected to be on this list. KTOS probably expected to be on this list. ASTS
Yeah.
People are running with this one now. They're like,
Yep.
whoa, ASTS, $151 billion contract. Well, okay, it's a $151 billion contract to build the Golden Dome, and then there's 380 companies listed on here that are going to get a piece of that action. So the people who are spraying around that ASTS is getting a $151 billion contract, that's not the case. They're getting a piece of that action, and we don't know what
Yep.
piece they're getting. But algos buy first. Investors love this story. It's a sexy story. The stock's been blasting off here for the better part of 2 months. So it's up another 7.5% here this morning. Also,
I want to just say the reason that we're like it's hard to process. Like, why are we showing this list on screen right now? There's so much information here. That's why we're sharing it here, because there are, what did you say, 300 contractors that are involved?
I think there's 380 on this list alone, and then there was already some awardees before that. So most of these are private companies. You look at the names, you won't know a lot of them. There's a lot of smaller ones, but there's some public ones there that we know as well. Like we said, AeroVironment. The other one that's on here, which was a little bit of a surprise, IONQ. So this is getting IONQ 2% left here this morning as well. Cloudflare is on there, Net, are these shocking, like that they're on there? No, I mean, it's all tied in. There's a lot of companies that are going to be on there. So, but what we can say with certainty is that this is the driver of price here this morning for ASTS. So up 7.8%. The stock has been really hot. Also, Rocket Lab, its brother-in-law here. We'll get to that in the rate when we rate the ratings, but it got an upgrade from Morgan Stanley here. Both of these stocks have been in blast off mode, yes, pun intended, since December. So big moves here. I mean, ASTS up like 110% now since the low in December, and Rocket Lab is up, I believe, even more than that, from 40 to 93. Do the air math there, it's like 120%. So big moves here for both these stocks. They remain in favor. Where it ends, who knows? But we know momentum can go for a long time. I mean, just look at SanDisk. We've been talking about this. The stock is up another 20 points. We joked yesterday in the STN room. The play has just been to be long SanDisk, and it just seems to go up every single morning. You come in and just up another 20 points. Well, here it is. It's up another 20 points here again. And Micron is trading up also another 16 points here. So trying to call the top on these has been a difficult task. Micron, believe it or not, gets an insider buy last night.
See this.
So, here you are, whatever it is, 200% over the course of the last 3 months. And now we have an insider buy. Whoa. Director Liu Tian buys 23,000 shares at $337. So that's making people more excited here that they're actually getting insider buys at this point in time. It's like, what does this person know? How high can this stock go?
Wow.
This is where you are. So Micron moving up here too. So the momentum continues in those strong momentum names, because the overall market's kind of been complacent. We've had, some fade trades in there, but there are certain pockets of momentum that are relentless. And Micron, SanDisk, ASTS, Rocket Lab have had relentless momentum.
Dennis, something that you've taught me to look for on the insider purchases is how big, what's the proportion of a purchase for the total size that a director has. And so, like if they have 10 million shares and they bought 20,000, and you're like, well, they have 20 million shares still.
Yeah.
This director, they only have, after how much did you say, 23,000 shares they bought? That was disclosed yesterday. They only own 25,000 shares in total. So they only had 2,000 shares before and just added 20,000 extra shares on there. That seems like some conviction.
Some conviction.
Exactly.
Yeah, and it lets you think, like, maybe this run isn't over yet. What do they know? So it's a big movement here. Obviously, stocks move, and these stocks have just been unbelievable. I have no idea. Like, it's a tough game. Like, just going to call tops. We're gonna get Tony on the show here in a bit. I know he's not the biggest top caller either. He like waits for the dips and then starts to get back in. I mean, hard to chase here. But at the same time, let's look at the Micron chart just a little bit closer here and jump into it. I mean, you put in multiple highs at 350. So now you start breaking out. If you look at the short-term chart, we just consolidated for 7 days. So consolidation station usually continues in the direction of the previous trend, which was definitely higher. So you start thinking about this and like, well, I don't want to be short now. I mean, you're now breaking out through all that 350 top area here. Now it is options expiration. Maybe there'll be some pinning action. Maybe there's some open contracts there with some people with some calls and some puts. But, and that's always a consideration. I haven't dug in and looked at the open interest at the 350. But for the most part, when you have the volume the Micron's been getting, the options usually take a backseat anyways.
And if you do want to look at volatility in Micron a little bit later today, we will have CC Legator in the STN room, 1:30 to 2 p.m. This is not Options Unchained. CC does Options Unchained here on YouTube on Wednesdays, 1:30 to 2 p.m. This is kind of just like a little more of an intimate moment with CC in the STN room. That will be again at 1:30 today. Every Friday we have CC on in the STN room. Thanks to CC.
Tony says he's here. He's here in the chat waiting for us. Tony's in the chat. Tony's ready to rock, and
Nice.
He's in the chat. So, okay, we get the Shield obviously covering the ASTS move here too. I love this rundown at the bottom because it keeps me on my train of thought. Because I'll go on a tangent, and you guys won't get any of this information here. So at least it makes me stay on task here. And on task is to bring you the information along with my trading analysis and some trading ideas here. ONDS. Who was it last night that gave us this in the chat?
It was Brian D.
Brian D. Congratulations, you're listening, Brian D. That was a great call. He said it's Investor Day for ONDS tomorrow. I bought a piece. I know there's some other people that bought a piece. I already sold it here this morning because we actually already had a headline coming from here. But it was a great call. Sometimes these stocks, we're about catalyst trading, and sometimes stocks run ahead of events. So ONDS running ahead of that event. They're raising their 2026 revenue. Do you see it?
Yep.
Go ahead.
Yeah. So they are raising their 2026 revenue target 170 to 180 million. Let me see if I can grab an estimate here real quick. See how that compares. That looks really strong. The estimate was down around 140, so about 30 to 40 million over where the analysts are is where ONDS just raises guidance to. This was something that the company announced. They told us that they were going to do this. They even told us that they were going to give guidance. When companies tell us that they're going to have these investor days, they don't always say we're going to give guidance. They just say, we're going to have an investor day. Come check out the webcast here.
Sure.
On January 5th, ONDS told us they were going to have an investor day. They said they were going to give an updated business plan. They said they were going to talk about their Core Plus strategic growth program. And they said they were going to talk about their 2026 financial outlook. As far as catalyst trading goes, how much cleaner of a setup can you get than that, Triple D?
I mean, that's what you want. And again, looking at the calendars, and there's different places you can go. Market Chameleon is a great place. We try to obviously bring and highlight the main ones here on this show and in the Stock Trader Network platform there. We're always talking about catalysts, which brings us to the number one catalyst that is out there is earnings. And we had a number of earnings here this morning. We're going to talk about those. And then we'll also preview earnings for next week here too. But let's go into those earnings here right now. Regional banks. So in my acronym, which has been doing pretty darn good. I had Baidu, which is up from the year as my B. My R, I had Rocket, which has been just flying RKT. It's been a great one there. I also had Roblox, which has turned around and now doing pretty well as well. And then my other R was regional banks. And we've been waiting kind of for these. Reason, I'm bullish regional banks. We'll get to these earnings in a second.
Yeah.
Is I do believe the next Fed chair is going to be a dove. I do believe that interest rates are going to head lower. I think this has been a headwind for the regional banks for a very long time. So if we continue to get lower rates in the second half of this year, and this acronym was for the full year, I think regional banks go higher. Now, I'm not long any of those yet. It's kind of thinking more towards, the back part of this year where they're really going to benefit. But if you believe the market is forward looking, the day the Fed announces the new chair, and it's going to be one of the Kevins, probably going to be a good day for IWM and the regional banks. So I think we've been, really look at the KRE, gone nowhere for 7 years. Bring it up here, Brent.
Okay.
Let's just bring up those charts, talk the KRE, look as long-term as you can go back on those TradeStation charts that you got there. You can see, so this is a short-term chart, but if you go back, you have 4 years. You got nowhere in 4 years, 5 years. That's a 5-year chart.
Sideways.
We've gone nowhere. We've been a consolidation station. Why? Well, regional banks haven't been the best place to be, but if you get a lower interest rate environment, a lot of, these banks, are underwater because they've got more mortgages, they've got lending out there, at, higher, they've been borrowing at higher to lend lower, some of these long-term loans. So that all of a sudden that trade could reverse for them. And some of these companies some of these regional banks could actually net benefit if we start getting short-term rates lower. So KRE, short-term rates lower, is going to help them. And I think we see that in 2026.
Absolutely. And so, we'll go through a couple of these here real quick, but I mean, like the earnings aren't the most exciting. Just, a little heads up here. I'm sure
Yeah.
everyone already understands that. But, in the context of talking about regional banks, we thought it would be nice to, bring it up and we can kind of recap a little bit of Triple D's
Yeah. So you have
acronym there.
4 big ones reporting here this morning.
Okay.
PNC,
Okay.
RF,
Okay.
STT, and MTB. And they are mixed, completely mixed, because you've got half of them up, half of them down. PNC is trading up 3.4% on its report. I don't even know. Oh, lovely that you put the numbers on the screen here.
Thank you,
So we don't even have
Michael.
to read them. We can
Michael
just
had it
look at
ready
them.
for us.
Yeah, look at this guy.
PNC Q4 earnings a beat. Oh, whoops. One sec. Let me put those up a little bit longer.
Sure.
PNC Q4 beat 488 versus 420 sales. I don't know how much people care about sales for regional banks, but sales about 6 billion, also a beat versus a 5.95 billion estimate. PNC chart especially do anything for you, Dennis?
No,
Yeah.
I think I'm just KRE all the way here, just looking
Absolutely.
at that. And I would be, if you don't have any exposure, and I don't, I am looking for an opportunity to add some exposure. Now, one thing to consider is depends how fully invested you are. I'm fairly fully invested right now. So in order for me to put something else in there, I got to sell something else, unless I want to start margining up. And I never, so long-term, my trading account, I use margin all the time. Every day I use margin. In my long-term investing account, I never invest on margin. I don't know. Maybe I'm missing out. Maybe I should be invested on margin. In bull markets, it's awesome. But I tell you, in bear markets, it's a really good way to really lose a lot of money. Because if you were fully margined invested back in 2009, you may have actually blew out your long-term investing account. So I never invest on margin, but I do trade on margin. That's the big difference there. But, let's talk, so the regional banks moving higher here, STT moving lower. You can see that. It seems like when these stocks dip, though, there's a lot of contrarian trading in banks. We saw it, with Goldman and Morgan 2 days ago. They get the rip on their earnings, then they dip, then they rip again. STT gets the initial dip. It seems like all these stocks tend to move together anyway. So when you get deviations, they're usually, if they're dipping, they're often buying opportunities. They're ripping too much, they're often selling opportunities. Regions Financial, another one that missed.
Kind of just rolling through here, showing them on screen as you're talking Triple D.
Yeah, so Regions Financial missed, and it's trading lower here too. Again, I would be a buyer of dips on my kids going to school. I would be a buyer of dips on the regional banks. I think the headwinds that have held these stocks down for the last 3 years, because interest rates have been going higher, are behind us here now. I do think we're going to see rates significantly lower at the end of 2026, and I think these stocks benefit. So this is an interest rate play, and this is not a short-term trade. This is like, looking longer term, looking out a year here.
Awesome. Let's let me see. Let's see where the banner tells us to go. Regional banks weekend.
It tells us to everybody working for the weekend. So, we talk strategy a lot in Stock Trader Network Room. We want to talk strategy with you guys here too. Like, we want to give news because, pre-market prep, there's 2 purposes. 1, to give the news, 2, to give you trading ideas. But, we've got to dig in and talk strategy every once in a while too. My best, most successful trade in the last year has been the weekend trade. We didn't do earnings. We went off the board. We didn't do the earnings.
Let's do let's finish your thought, and we'll go back.
Let's do the weekend trade, and we're going to preview earnings for next week, because that can actually go into the weekend trade. So the weekend trade, what is it? Well, it's getting long stocks on the Friday close and selling them usually on, sometimes Sunday night if Robinhood or Interactive Brokers markets go crazy, but usually Monday morning, getting out. So basically taking it through the weekend, owning stocks through the weekend. We've been very consistent with this trade this year. It's been my number 1 trade for last year. I was up 38% my trading account last year. A lot of that gains was probably due to the weekend trade. So what is it? Well, I've often talked about the XBI weekend trade, where you often get deals on Mondays, and the XBI can, sometimes, pop if you get a deal. That's been one trade, but the weekend trade more so, where we've been making more money, is focusing on retail darlings, and not talking like apparel and retail stocks, talking about those stocks that are really loved in the retail community. And we had a couple users in the chat. I believe John was giving us some of the main stocks. He ran some scanners. Mike, also another user in the STN, running scanners, looking for the best stocks through the weekend. Robinhood usually is a pretty good one. Crypto's a good one. It's a stock that's very much loved. SoFi, usually one of those that the
SoFi.
retail community loves. So think about this. Stocks are closed Friday. Saturday, they can't trade at all. Sunday, they're like, please open the market. I'm so excited to get the market open. They go to their darlings. They go to the Teslas. They go to the SoFis. They go to the Robinhoods. Those are the darlings, you know. So those are ones that I like to buy on Friday close and sell on Monday morning. Often works. Now, nothing works 100% of the time, but if it works 60% of the time, then you're going to make a lot of money with that strategy. If it works 55% of the time, then you're going to make a lot of money with that strategy. But we had some stats, and I believe it was John that actually gave us some stats. The number one weekend stock that he had on his list was what, Brentster?
Was it ONDS?
I think it was ONDS, which obviously has its investor day here today. Now, when they got news and stuff, you may want to avoid them. But just saying, it's just not one that was on my radar at all. I have done this through the weekend, but you know, this is one you don't naturally think about. But this is talking Friday night to Monday morning, these types of trades. So we're just outlining different ones. Am I going to do ONDS tonight? That'll depend on what they say at this investor day today. So that might change. You know, when you have fundamental news, sometimes you want to back off on these strategies because that can be more of a driver than the natural effects. But ONDS, give me the top 5. This was from John. John did this list?
John Higgins. Thank you, John Higgins.
Thank you, John. Top 5 on his list were
RCAT, number 2.
RCAT was number
Red
2.
Cat.
Something I don't even think about either. So that one's been a great one here for the weekend trade. I don't know how far he went back. It may be just a few months, but with this data, but just looking in the last few months.
It says he went back to the beginning of October. No, he went back to the
last quarter. These are the ones best ones from last quarter.
He went back to the beginning. Wait, no. Yeah, October. Sorry. Yep.
So for the last quarter. So we got RCAT. Give the top 5. Just list them right on.
Hive, number 3.
Hive blockchain. Look at that.
Hive blockchain.
Did not think
number
Hive
3.
would be on there.
Proud sponsor of PreMarket.
Throw the Hive banner up there for that right now. The weekend trade's been working for Hive. I do not trade Hive because they're a sponsor and I have conflict of interest on this. But you know, like we've been saying, the stock's been perking up a little bit. Obviously moves with Bitcoin. You know, and another thing to think about is Bitcoin often pops. IBIT, you know, is another one that often pops to the weekend. But crypto trades all weekend, so it's not like they can't trade it Saturday. So these effects, you know, they can't trade Hive, but they can trade crypto. So sometimes crypto gets popped through the weekend. It'll lift the Bitcoin stocks, which Hive is one of them as well. Continue on. We'll have Hive sponsor this segment because they're one of the stocks.
Want to say thanks.
What are the other two? You got to say your thing. So say your.
Should I say it? Okay. Thank you to Hive Digital Technologies, sponsor of PreMarket Prep for most of last year and continuing on into 2026, folks. We are proud to have Hive as sponsor of this show, global leader in green power data centers for Bitcoin mining, high performance computing, and AI, operating with nearly 0.5 gigawatt of renewable energy. Hive was on track to capture 3% of the world's Bitcoin production by the end of last year. QR code on screen right now in the bottom right corner. That'll take you over to hivedigitaltechnologies.com where you can learn more about the company. Awesome. The number 4 was UMAC, Unusual Machines.
That doesn't surprise me. These drone plays have been hot, and we're talking from the last quarter, and that one doesn't surprise me at all, and one that I've been doing as well.
Number 5, SanDisk.
Oh, of course it's SanDisk. The stock has just been the monster. You could almost do the weekend trade every night with SanDisk, it seems like, because it seems like it opens up every day. Now, eventually, there's going to be an ugly fall here. Don't kid yourself. Stocks don't go from 100 to 400 in a straight line and eventually don't have a pullback. But, you know, trying to call that's been a difficult task. Just going with the flow, though, and being long this stock through the weekend has been working very well. So cool stats here, John. Also, Mike sent me another one. Mike was doing the same thing, and
Mike was using Perplexity.
No, but he gave me a stock, and he said one of his was ONDS as well.
ONDS, yep. Also.
Yeah, he came up with the same stock, ONDS, looking at the weekend gapper. He also said silver. Silver has been doing really well through the weekend, so which is not surprising because silver's been so hot.
Yeah,
so that's not surprising at all. They're all looking in the last quarter.
So Dennis, I want to circle back to something they said here real quick, sort of behind the thesis. So, you know, you were going through this progression, you know, Friday, people are finishing the day, Saturday, markets are closed. They're so excited to get futures open on Sunday.
Yes.
What happens Saturday is people go out and they're humans in this in this world, in this social world, and they're talking to their friends and they're like, "Oh man, did you hear about ONDS's guidance?
I think
ONDS
so.
had really strong guidance. Did you hear about
Mhm.
it? Oh no, I didn't hear about it. Oh shoot, should I play it next week?" That's that anticipation that you're preempting. You're being proactive toward
Yes.
that kind of discussion, out here in the world. And so,
Yeah, what are
you
people going to be talking about next week?
exactly,
You're always
exactly.
trying to anticipatory trading, which is what I specialize in, is trying to think about what are people going to be talking about? What are they going to be focusing about? Like I said, you can go anticipatory for the whole year. I think robotics is going to be a big theme. So I continue to play like smaller companies, like even Rich Tech Robotics, obviously I have a position in Tesla, but there's a whole bunch of these robotic stocks. Those ones work through the weekend too because they're themes. They're themes that people are talking about on a continuous basis. So then you can also do short-term anticipatory trades, which is like earnings,
You
which
just
might be a good
adjusting the
segue into
time
our
frame.
earnings calendar here, which Michael just put together so nicely for us here. If you want to show it, Brentster, we'll get it
Sure.
up there on the screen.
Yep.
But being long stocks ahead of reports, people get excited about stocks that are going to report next week. Media is talking about it. I mean, what do you think? So we have Netflix reporting Tuesday night. I can pretty much guarantee there's going to be people talking about Netflix here in the next couple of days, through the weekend, Monday. Oh, what do you think of Netflix? What do you think of Netflix? As more and more people talk about Netflix, it's just out there. It's probably going to, potentially drift higher. And the other thing is if you are short Netflix, short-term traders don't like being short into earnings. So you're probably going to cover ahead of that too. So there's two catalysts that say Netflix is sitting at its lows. It's sitting at its 3-month lows right now. So it sets up really well. But I think Netflix sets up good into the weekend trade. I think it sets up good as a catalyst to running into Tuesday night. Now, a catalyst trade, we've talked about this, is owning the stock ahead of the catalyst and then selling it afterwards or selling it like before it goes into the actual catalyst. So I'm not advocating to own Netflix into earnings. I'm advocating that I believe it's a trade to own Netflix ahead of earnings.
Ahead of the earnings
So,
and get
I'll
out.
probably start that tonight and probably look at going into Monday and potentially taking that in and then selling it before the Tuesday close. So because who knows, the earnings a coin flip.
And so I want to you've been touching on it, Dennis, but I want to ask you deliberately, can you talk real quick about the risks to the weekend trade?
Well, there is a lot of geopolitical risk here right now. So one thing is we can just say, oh, let's just buy all these stocks that go up every weekend and we'll just make money. Right now, it's not as easy. So this weekend doesn't set up as easy because of the geopolitical situation.
Being
We don't know
cautious.
the whole Iran situation. If bombs start going off, we saw it 2 nights ago. There was a rumor on Twitter, which was not true, but they were saying there was, bombs blowing up, in Iran.
They said
And
there was an explosion. There was an
explosion. They heard an explosion in Iran. And S&P dropped 20 points in 20 seconds. That was not true. And stocks bounced back, but that's how jittery this market is.
There you go.
So if you see, geopolitical risk, if you see tensions rising, if you see Russia commenting and saying, hey, all these, warships going up into Greenland here, we're not going to allow it. And they've been talking about this a little bit and they get involved. That makes you nervous, about the whole. So that can tank the stock market altogether. So often what I do on the weekend trade is I sometimes short a little bit of SPY or short a little bit of Qs against some of these positions to try to if world blows up over the weekend, then I don't get killed.
You can
So
wiggle
trying to
out.
extract the alpha of the positive run up above the market. So extracting, that alpha from, the stock strategy that we're talking about while trying to limit some of the overall market risk, which is quite high right now. Like that is what I will say. It's been a fun ride. But if Greenland, situation continues, and it looks like it's getting better right now. The last couple of days, they had a productive meeting. They're talking about purchasing and not taking it. I mean, that's all good stuff. That's good for the world. That's a better solution than to go and invade Greenland. Invading Greenland breaks down NATO, and who knows the repercussions from that. So we're hoping that doesn't occur. But you've got to be aware as traders there is a risk. So the risk of war, and you can just look at any stocks like Lockheed Martin, NOC, General Dynamics. The war trade is on. Stock market's pretty smart. So when they're buying all these stocks, they're telling you that tensions are high in the geopolitical front. So we just be cautious.
Great setup there, Triple D. So we got a few minutes here before Tony. We don't have any 8:30 data. I just wanted to give a little heads up on that.
Okay.
So you're giving us a really good hint as to how you're setting up for This weekend, which I want to just say, reminder, is a holiday weekend trade. The market is closed on Monday for the MLK Jr. holiday. So you have an extra day for this trade. Could be a good thing, could be a bit of a concern. But I want to pull up this chart, this calendar now, and besides Netflix, see if there's any stocks that are piquing your interest for next week, anticipatory run up type of
Yeah.
trade.
I mean, what stands out? Netflix like a sore thumb. That stands out like a sore thumb. Also, Intel on Thursday. That stands out like a sore thumb. So those are two stocks that are very much talked about in the media on a continuous basis. Two stocks that are very much, talked about everywhere. I mean, so those are the two standouts. So Tuesday night Netflix, Thursday night Intel. But there's some smaller companies that are interesting as well. Obviously Fastenal, nuts and bolts of the market. I always joke because that's obviously they make nuts and bolts and nails and everything to fasten down and building materials. 3M stands out there a little bit too. We've got Johnson & Johnson reporting on Wednesday. We've got Mobileye, which is interesting. That might be one for we can trade. General Electric. That's an interesting one for Thursday. Also, it sometimes moves up and, geopolitical risk rises a bit. Schlumberger on Friday. So you've got some stocks, but there's two that stand out. Two main ones, Netflix and Intel. Those are ones that people are going to be talking about all next week.
Do you think we can fit in the discussion about the energy auction before Tony Triple D?
Sure.
Okay. So one of the sort of macro items from overnight, actually it was late last night. I was trying to track down the exact time because that does matter, folks, and I think we'll get into that in just a sec here. But Trump said he's going to start doing energy auctions for tech giants to pay for their power needs for AI. I think the heart of this thought here is that Trump doesn't want citizens, doesn't want consumers, energy power need costs going up because we're using so much to try to generate AI. So we have some separation happening here, which is very interesting. We have some of these utility stocks that are moving higher, some that are moving lower. The data center names like a CoreWeave and IREN, those are moving higher on this. The few that you wanted to look at, and I'll pull up my chart in just a sec here, Triple D, GEV, NRG, PWR, Quanta Power, those ones are moving higher. CEG, Constellation Energy, and Vistra, VST are moving lower on this.
Yeah. So it's funny because we trade all these as a group and you're like, oh my gosh, CEG, VST going down, GEV going up. What's happening here this morning? Because these nuclear stocks all kind of trade together. Well, it's the structure, so GEV actually helps in the building of these plants, like they're like more like, and then you've got obviously CEG and VST, which are going to operate nuclear plants. So they're a little bit different. So this headline here, if it brings down, like costs of, nuclear power here, it's not good for CEG and VST. But, if it's going to make these plants go up faster, then it's good for GEV and PWR and BE. So you got to understand it's not all, normally these stocks kind of all move together. And if you look at the charts, GEV, CEG, kind of look the same. But today, the specifics of this headline have these stocks going in opposite directions. So do they eventually come back in? Probably. I mean, this is a small short-term trading headline. Maybe it's the fade trade on both where you're buying CEG, shorting GV, maybe. But it's always, the tricky game when you're talking, fading stocks and shorting stocks. It makes it a little bit tricky.
All right. We fit it in. We fit
and
that.
GV wind turbines, great point, K-Tan, turbines as well. So, I mean, you're looking at this too. So it's involved with all this, but, GEV obviously benefiting here.
You want to go get Tony?
Yeah, let's grab him.
Let's go get Tony. Tony Pollock, Real Life Trading. What's going on, brother?
What's going on, guys? How are you?
I love you in the chat. Just sitting there, just chilling. Were you in the chat or was somebody be pretending to be the Tony Pollock?
It might have been someone on my team or someone pretending, but
oh, it wasn't you. Somebody was pretending. He wasn't in the chat.
We got Smurf, Dennis.
We did. Oh, they were pretending. There's a fake Tony Pollock out there. Dude, you are so big that you have aliases out there now.
You made it, Tony.
You made it. When you've got aliases, Tony.
That is the first sign. What's up, guys? That is the first sign that I'm making it because it's true. Like I guess I'm big on TikTok. I don't even have a TikTok, and all my videos are out there.
That's fantastic.
Can we get you a shirt that says "I guess I'm big on TikTok"?
That is a great shirt.
If you guys follow me on TikTok, that's not me.
That's so funny. That's fantastic, Tony. Okay, Tony, what's up? Let's show your charts first. We love Tony. He gets it up here. Obviously, he's great technical analyst, great options trader. We're on options expiration here today. But what is on your radar here for today? Like, what's Tony looking at here this morning?
Yeah, that is. I'm waiting to see how this weekly candle closes. So,
okay, we're gonna bring it up.
This is what's been. There we go. This is what's been on my mind here a little bit. Is whenever we make a new high, I'm always watching, because at a new high, if we get immediate weakness, like kind of back into this range, we can get some really fun trading over the next few weeks. So are we going to push strong today and actually close strong? That's what I'm wanting to see. If not, we just made a new high here on SPY. I'm all about SPY. I love trading those options. So it could open the door and finally, get us into 680, 670. So we could have some really fun day trading over the next few weeks. I don't day trade very much. Like, I just sell options. It's what I kind of do, right? Just consistent income. I got another week in the life coming out. I think next week, guys. I filmed it all week this week, showing you guys my trades of what I did with credit spreads this week. But
nice.
That's all I do. It's like, I realized long ago, stop making trading harder than it needs to be. Sell some options, and then who cares what it does?
That's a great strategy. I want to just stop there and talk this strategy. So it's a great strategy, but how do you protect yourself from like the black swan? Yeah. How do you protect yourself from like the event of like, because I saw people do this strategy and it works 99% of the time. Yeah. And then you get the financial crisis happens. And I watch so many people blow out their accounts doing this. How do you protect yourself against that the fat tails we're talking about if you go back to statistics? How do you protect yourself against that?
That is such a great question, because that really is what you have to be able to answer to be able to sell options successfully. Most people, they'll sell it like, all right, I'm making money, I'm doing great. And then one big event wipes out months of profits or more, right? I finally got successful nearly a decade ago when I answered this question: how can I mitigate my risk? Right? The downsides of this type of strategy, it's very consistent. We all know the upsides, but the downside is, how do I negate my risk? How do I offset these big risk events? Because, I'm risking, let's say, $500 a contract to make $50 a contract, right? If I'm wrong, I'm losing way more than I'm right. That I'm making when I'm right, but I'm right all the time until I'm not. And so the number one thing that I could do to help me with this, there's a few things. It's really funny, guys. If you check out our video, if you want more details on this, I actually just did a video on how to offset these things, but I'm going to give you a quick little rundown as much as I can until you guys kick me off and tell me to go away, but I'll keep running it.
Okay.
So the number one thing you can do, sell in the right location. So that is the number one thing you can do, because most people will get beat up because they sell in the wrong spot at the wrong time. So the number one rule you can do, sell below higher lows. Like this was our credit spread this week. I could have easily sold up here and been paid a lot more money, but this has a lot of risk, right? And so, it was going all over the place. This is very dangerous. If we can sell well below higher lows, you have a much higher chance of winning. When it does finally break, the second thing you've got to do, get out when it hits your sold strike. So many people try to go, it'll bounce, it'll bounce, it'll bounce, it'll bounce. When you're at your sold strike, you're going to be down, and it depends on the width of your spread on your credit spread and all that fun stuff, but around 30 to 35-ish% of your max loss. Okay. So you can recover from this, right? If you take a max loss, man, it's going to be months and months just to make up this one loss, right? So get out and hit your sold strike. That is the number one rule that has saved me. If Armageddon is coming and it hits my sold strike, that means it's already moved multiple standard deviations. And by the way, there's other things I'm going to do well before it even gets to my sold strike.
Right.
But worst case scenario, get out at your sold strike. That way you're at least not taking max loss. If you can avoid the max loss scenario, you're fine. The only time you're going to take max loss is on the day of expiration. So people don't get this, right? When it comes down to your sold strike, you still have time on this option, which means that it's not going to go to zero. You're not just getting wrecked on this. You're not taking max loss yet. If it starts getting deeper, yeah, you might be down 50% of the max loss or 60% of your max loss. Get out of your sold strike as best as you possibly can. So number 1, sell it in the right spot. Number 2, get out of your sold strike. Number 3, get paid more. Set yourself up with the market environments so that you can get paid more and still sell far away, because your risk is set with credit spreads. Okay. So it doesn't matter if I'm getting paid $1,000, if I'm getting paid $10, my risk is the difference between these sold strikes. In fact, it's a better risk if I get paid more, right? Because that takes off the top of my max loss. So what I want to do is I want to try to get paid as much as humanly possible for this trade, at least 10% of my max loss. If I can get at least 10% of my max loss, what that's going to allow me to do is make back losses quickly. If I'm taking a, 30 to 40% of my max loss when the losses do come, I can make that back in 3 to 4 spreads. I can make that back in a couple weeks. That's okay. Because odds, like right now, my friends, one of my strategies that I do, I haven't had a loss in over a year. We're on like 130 trades in a row.
Yeah, which is what I said. On this strategy, you can win up to 99% of the time.
Yeah, you can win all the time. It's that one time that
don't let the 1% kill you.
Exactly. And so if it only takes me 3 to 4 trades to make up a loss,
you're going to be fine.
You're going to be fine. If you're stringing
don't let
together
that one trade, you got to manage that one trade. Like you got to be able to identify and say, I'm in trouble on this one. Because what you'll see, it's like people are like, oh, they like Tesla. I'm selling the 400 puts and I'm just going to load up on this and it's going to be above that and I'm going to make my money. And then the stock goes to like 380, 370 and they're like, oh, I don't want to take it here now. And then it goes down to 300 and then they're like, I've just lost so much money because, you can say max loss, but when you're selling options, selling puts, the max loss is your put the stock. So, I mean, you do like 10 contracts, 1,000 shares, goes down to $300. You can pooch $100,000 in a hurry. So, I mean, this is, the issue is like, and that's what I always tell people. Like, I know sometimes you're doing the spreads, which is good. So when you put on the spread, you buy that lower put to protect you. But people will just sell naked puts. Mm-hmm. They won't put on a lower put to protect themselves. You're usually buying the lower put to protect yourself. Is that correct, Tony?
That's right.
Yeah. Yep. And that's the main thing you're doing is always protecting yourself with the spread. Because if you're doing it naked, so you're never usually doing naked put writing.
So I will sell naked puts when I want to own shares for long-term investments.
Okay.
So that way I never have to worry. If it tanks, I'm like, I was going to buy this anyways. I'll hold it for 10 years and I'll come out on the top end.
Sure.
And that works extremely well. But I still have rules to sell them at the right time. So it needs to be like, here's the easiest rule. When it hits the monthly 10 or 20 EMA, you can start selling puts. Like that's what I do. It's boring. It happens a couple times a year. It's not something that I can just like print off money. That's what my credit spreads are for. That's what I make consistent weekly money on is selling credit spreads, but those are capped. I'm okay. If it falls 10%, I have a game plan to be able to mitigate that risk. If I'm selling naked puts when the markets have gone up 123% on Tesla over the last 6 months, like at some point it's coming back down and that's when people get burned. They're just not willing to wait for the right time to sell these options. And if they do, they sell them in the wrong place because they're chasing money. So if you're selling naked options, sell it where you want to own for the next 10 years. And if you take that approach, it's slow, it's boring, but it works. If you want weekly income, shift to credit spreads. You can define your risk much better. You can get away with location more, and it's a lot safer, and you can still bring in really consistent income.
Just excellent points here. Love it, Tony. We want to do some quick ticker time with you.
Let's do it.
We love Tony ticker time here. If you've got a stock that you want, the first one that gets put at me here right now in the chat, we're going to have Tony cover it right now. So we're waiting on the first one. We just asked for it. So give me your tickers. What stock do you want Tony to look at? We're waiting. Holy chat. You're always talking, and now all of a sudden they don't talk. Nobody's got a ticker for us. If they don't, I'm going to throw it there. AVGO.
Oh, AVGO. Let's go. All right.
AVGO, let's go. Talking about AVGO. I'm interested in this one too. So I was talking about Broadcom. It's come off the highs. Is this a nice spot to, maybe write some puts, Tony? What are we doing on the AVGO?
Yeah. So like here, we'll go to the monthly real quick. We're coming into the 10. Like we are close. This is a good place for some puts. It's not quite there, but like this is a better place than up here or it rampaging up, right? So this is a good place for some put writing. And if I were going to write puts personally, it would need to be like 250 or lower. This is where I want to be. So sell it down there. That's what I would do. This is on the verge of going either way. Anytime we make that new all-time high, remember I said whenever we make a new all-time high and it gets weak, that can be some really fun day trading. Like there's some money to be made.
Sure.
Right? And we're kind of looking at that right there, right? So it's holding. I like the traps that have come through, but whenever we get a trap, I want to see a run. Like we got some traps through here and we ran. This like started to, and then the engine sputtered and ran out of gas. And so we're still kind of stuck. This to me looks a lot more like a flag than anything after this. So this is more like a resting play after a big move down, probably opening the door for a little bit more of a lower move. That's what I'm seeing at the moment. It doesn't have to do that. But if we get a strong close below this trend line down through here, we're probably working our way down to the gap fill at 308. And then we'll see where the bulls step in through there. That's also the 200 sitting right there. So that's fun. I could see this moving a little bit lower, and 310 to 300, I feel like is the next buying spot. If that fails, then we're moving back into where I really want it, which is around 250 to 220. Will that ever happen? Probably not. I don't really get the levels that I want because my levels are pretty greedy, and that's just fine. I haven't gone wrong being greedy on these levels and waiting on them.
Do you look at something like this, Tony, and just say, hey, I would want to own it here anyway, so why not get some premium and write the 250s? Do you look at that?
Yes. That's what I was going to say is you can still make money while you're waiting for your buy area and just start selling premium down there, because right now we're down getting close to that 10 EMA on a monthly. Perfect time. So start selling premium down here. This is what I'll start doing if I want this. I feel like this is a great buying spot. If it never gets there, I make some money off of premium. If it gets there, I make money off of premium, and I get a chance to buy the shares where I want them. It's like, that's the play right there. So I'm seeing a little bit more weakness on this potentially. If the bulls were going to come back in, which they very well could, I don't know what's going to happen. I just have a game plan. For bulls, I have a game plan for bears. It looks a little bit more bearish to me. But if we start getting closures above 360, this little resistance area, that could open the door for a move back into all-time highs again. So we'll just see what it does. But at the moment right now, we've got our bull queue and it just fell apart. So put alert there at 360, see if we can claim that ground, and it'll start climbing back up again. To me, this looks more like a flag after a big move down. I think we keep doing this and then drop down. So a little bit more chop over the next few weeks, and then maybe a little bit more of a drop on this one is what I'm seeing. So we'll see. What's the next one that we got?
Tesla. They got to do TSLA. Everybody wants to know. And you know what? This stock has just been kind of consolidating here for the last little bit. It looks a little bit tired to me, but I don't want to influence your opinion here. What are your thoughts here, Tesla?
No, I'm on the same boat. So Tesla, again, made a new all-time high. We had some fun day trading over the last few weeks. Mark that strategy down. For those day traders out there, new all-time highs open the door for some fun if the bears start to come back through. We're at that spot right now where it kind of has to hold. This is where we bounced last time. We're kind of into that same, 20 SMA is this dotted line. We're playing that game again, but we have some overall weakness sitting through here. So it's sideways. It's this, I don't really know which way it wants to go, but I do know that if we start taking out some of these lows, then 360 is where I want it. You can already see where my alert's at. I am waiting for 360. If the bears come through, I think 360 is the start of the buying for the bulls. So will it ever get there? No idea, but we've got room to go. And these upper wicks on a monthly time frame, it's not inspiring. I don't love to see weak closures at new all-time highs. Like, it's just not ideal. So could we be putting in a little bit of like a pennant pattern coming through? Maybe if we start getting some more of this, that's what I'd be kind of waiting on. I think earnings is going to determine everything coming up here. So whether or not this wants to be rampaging bullish and rocking and rolling, we're kind of at the buying spot. If history wants to repeat itself, that's what I'm seeing. But it's a big old question mark, and it's probably going to stay that way until earnings gives us some more sentiment. So
last one. We had multiple people asking from Microsoft. I want to know your thoughts here too. Just made a new 6-month low here on the chart, which is, not always ideal here. Looks, to me like there's something else happening because the market's at all-time highs. Microsoft's almost 100 points from its highs here now. What are your thoughts on the MSFT?
Yeah, so again, we had a little bit of that flag pattern that broke down, and that's why we're getting a lot of bear sentiment through here. But something that I noticed a little while ago, so we have this massive double top, and if I went to a weekly chart, this double top is pretty intense, but we've also got the expected move of this double top is playing out pretty nicely. If I could grab it. So we've got this expected move back down on the double top around 430. And that's also bringing us right back into this previous support. Could we fill the gap? Sure. But if this has got a little bit lower to go, again, my alert's sitting right around that 440, and there's a reason for that. That's the expected move of this double top. So could we be getting more selling? I think so. Again, pretty nice pennant on a weekly that broke down. If anything, we retest back up into 475, and bears should be there, should fold back down. So I think we continue to drop. This is going to be the spot where I love the bulls at 440. I mean, we could go all the way down to 400 potentially and bounce. It's still decent, in my opinion, on a monthly chart. So again, we're getting into the 10 and the 20. This is a good place to start selling some premium at the gap fill. If you, for those put sellers out there, sell. I would be selling like the 400 out here, 410 on Microsoft, and it's going to pay down there too. Okay. So a couple months out, that's what I'm liking. Overall, it still looks pretty weak to me. Bulls should get rejected most likely here. Sorry, this was a way old trade from back in the day. So probably going to get us something like this if I had to guess. So just be careful on these bounces. I'm not going to be like FOMOing into buy the dip here. If we can reclaim 490, it's going to run. That is my line in the sand right there. Bears should defend that for now. We're probably having a little bit more fun coming for the bear side. Are we getting ready to enter into that resting phase again? Maybe. So
can you get one more in? Because multiple people, nonsense. Jennifer, John asking Astera Labs, ALAB.
ALAB. All right. This one is putting in a nice foundation. I love these long-term foundations that are starting to be built after a pretty large drop. So for me, fantastic support. I love the buying pressure coming through. The 50 EMA on a weekly, pay attention. Like that's where the bulls are clearly trying to show up. So if we revisit that again, it'd be another opportunity to jump back in. We need to start claiming some of this resistance that's being built, but anything above 185 should open the doors for a new all-time high. I like this play a lot. And, some simple as like a trend line. Yep, right there. See how these are all lined up on this? Look for a dip on that trend line one more time would be a great buy, in my opinion. You'll know you're wrong fast. If it doesn't bounce off of that, close. But anything down through here around like 160, 163 could be another strong buy. I feel like this has a lot of bullish momentum to continue up and revisit the all-time highs. It's just a matter of time and, when. So if you're playing this with options, you've got to nail your time. You've got to nail your entry. So getting in a little bit lower, and then this might take a few months to get up to 280. So at least give yourself like 3 to 5 months is what I would do whenever buying these options, or more. Options you can get paid a lot of money buying, but your timing has to be right. If you buy an option that expires in 3 months and this takes 6 months to get there, you're right, but you're not going to make any money. It's better with shares in this instance because I don't know how long it'll take. No one does, but there's bullish momentum. It could happen fast. I like this for a little bit more of a bull play, and we'll know we're wrong pretty quick if this starts to break down where the buyer should be. So that's what I got.
Tony Pollock, coach and owner over at Real Life Trading. We love having you on, Tony. The chat loves having you on. Hope you have a good weekend.
Love you guys. Thank you so much for having me. Have a great weekend.
All right. Thank you.
See ya.
Triple D, you ready for rating the ratings?
Yeah, let's go.
Let's
do
go.
some ratings.
Okay. Ratings is brought to you by The Fly. They have a new pro platform. We're going to show you from it in just a second here. Your source, The Fly, your source for over 1,000 breaking news articles daily, delivered in real time with custom filters and alerts. Discover their new Fly Pro platform with AI-powered company analysis, unique KPI charts for deeper insights. There's a QR code on screen right now, or you can scan that, or you can click the link in the description to learn more about The Fly. Triple D uses The Fly quite often for ratings. I'm using it on a daily basis. Nice little platform. And thanks again to Fly for sponsoring this segment and for sponsoring pre-market prep triple D. I think the first one you want to get into is HPQ.
Yeah, we'll do the
Downgraded.
downgrades first, and there's a
Do the
number of
downgrades
downgrades
first.
here today, but we always highlight a few of them here because we think when we get some bold calls, a lot of these are chasing, but here's one stock that has absolutely just been in the gutter. HPQ's yield now 5.99%. The stock is down at $20. Company has problems, and now after all of these problems, we get Barclays coming in and downgrading it now. So this one's absolutely chasing. Give us some color here. What are they saying?
While the shares are, quote, inexpensive, secular challenges across both computers and printing combined with a lack of catalysts will keep HP pressured in 2026. Barclays expects the current memory cycle to pressure the company's PC business with further downside potential in 2026. What do you think about this rating? Can you
I
rate
think
this
you're
rating?
at $20, which is going to be critical support for this stock. So I think, just psychological perspective, 20 is big. We're back to where we were in 2020. We're just giving back 6 years of gains here. So HPQ's got problems. PCs have problems, probably. I mean, this isn't, the area that maybe you want to look into, investing, but you do have that nice 6% dividend. And, do you think, PCs are absolutely going away? If you do, then maybe you don't want HPQ. But I don't know if they're absolutely going away. I think there's still a need for PCs. I use 2 of them on a daily basis here. So
Using 2 right now.
yeah.
So
But this has been an ugly, ugly place to be here. So I'm not sure what turns the story around, but the Bears are in full control. And then you get pile-on downgrades like Barclays here, which is way late to the party. So I'm going to rate this as C- for this rating because it's just too late to the party here. Sorry, Barclays.
I think you're being kind of generous even.
You're giving them an F?
I give them like a D, maybe
or
a D
fail
plus,
because
maybe.
now you're downgrading and after we just watched the stock fall 50% in the last year.
Maybe.
There's an argument there.
Next, you want to do Kraft Heinz KHC downgraded.
Yeah, I haven't talked to food stock in a while here, so this one's interesting. Yeah, KHC downgraded Morgan Stanley. What's up?
What's up? Let me pull up the chart here, and then I'll read some of the color from the fly.
Pull up the fly commentary first, and that'll help me with my technicals because I like to look at the fundamentals and then the technical.
Okay, awesome. Okay, one sec.
Just bringing it up here. Fly. KHC. Been in a downtrend. Stocks been moving down. Not been one of the best places to be. A high yielder too. 6.69% dividend. What do they say?
Morgan Stanley says the U.S. food sector faces rising competitive risk as value-focused pricing, promotions, and private label momentum re-accelerate this year. Analysts add to already present sales pressures and limit the scope for margin recovery. Morgan Stanley believes Kraft Heinz, quote, faces particular acute risk given its outsized private label penetration. This one is kind of interesting here. I like the color, at least from the analyst.
I like that the stocks had a recent rally and they waited for the recent rally. So you can see how these analysts are like technical analysts too, and they wait for a rally sometimes to initiate the sell rating because they're marked from when they're calling it. So when it's going down, 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 they want a little bounce. They sell the rip as well. So the analysts selling the rip, so I don't mind that factor. Let's be honest, KHC has just been a terrible place to be for a very long time. I don't know why, but the dividend is nice, 6.69%, but the stock was $62 in 2018. Here you are 7 years later, and the stock's down 60% from those highs. So this has been a bad place for a very long time. It's not, there's so many good staples out there. Like, why be a hero and go in the Kraft Heinz one? So I'm going to say I'm staying away on this one.
All right, you want to do one
let's
more
do an
here? Do an upgrade? Take your pick. Dealer's choice.
Yeah, let's do BNTX because this one's coming out of the blue. You got Goldman upgrading BNTX to buy. Long term, the stock has really not done well since COVID. I mean, we had the COVID pop when it went from 2020, when it went from $50 to $450, and everybody, thought, COVID was ruling the world. Now that COVID is gone, the pandemic is over, people aren't getting as many COVID shots, the stock has just been stuck in the mud for like 3 years here now, not doing a hell of a lot of anything. So what are they saying? Why buy it now?
They are saying with a broad strategic suite of programs, Goldman views BioNTech as, quote, being at the nexus of significant developments occurring in the oncology field and is uniquely positioned to develop novel combination approaches to transform cancer care, Data unlocks in 2026 could position the company with a quote leading foothold in the emerging wave of new product cycles. I'm not sure what the analyst is saying about the data unlocks part, but how do you feel about this Goldman call here, Triple D? We know that Goldman is really kind of like your tier one firm, the tier one firm,
Yes.
the firm that moves stocks when they have ratings the most.
Bring up the chart. I mean, we've been in consolidation station here for 3 or 4 years here now, putting in a nice base 90, 95. And now we're trying to lift out of there. So it's interesting to me at this point in time. And we have seen drug stocks, you know, Moderna has perked way up. It's went from 25 to 40. So we are seeing the drug stocks start to come back here and start to show life. So that's the good news. Bad news is, you know, it's still a hangover from COVID and it seems to not be going away. But I like the drug stocks here. I've, you know, recently, you know, been buying some drug stocks because I think, you know, there's Novo. I have a huge position in NVO that I recently bought a month ago. I mean, I just think that there's so much value in some of these drug stocks, but this is not one of those, unfortunately, value stocks because I don't even think BNTX makes money. Do they? Let's go
look. It's a race.
I don't know look here too. I don't think so. I know they did back during the COVID shop, but Moderna's went through a cash burn situation. They're trying to come out of it.
BNTX is not making money. They have not made money for a couple quarters, few quarters, 2-3 quarters.
No, I know. So that's one issue. $25 billion company. I'm probably just going to stay away. But from a trading perspective, it is perking up and looking a little like it has a little bit of life.
Triple D, ready to go over to SCN?
Yeah, we're gonna options expiration. Just closing thoughts. It is options expiration here today. I do expect some big moves at the open and potentially the close here. We obviously trade those closing trades live, and we trade it live here in the open as well. So if you're interested in learning more about the trading aspect, that's what we're doing over in Stock Trader Network room. Look at imbalances. A lot of sell imbalances here this morning. Now those could flip to buy, but as of right now, if the market was to open, some of these stocks are actually going to open down.
We've had this discount for more than a few months now. PMPSTN for our pre-market prep listeners. If you want to come over and check out STN, stocktradernetwork.com. We have a chat running all day. We have midday programming. Right now we have a couple hours of daily midday programming. We are looking to expand this by middle of this year to more or less pretty much 8 a.m. to 5 p.m. kind of content. Triple D and I are doing a closing show every day, 3:30 to 5 p.m. The closing bell where we're getting you ready for the close. Triple D is trading after hours and I'm breaking news in real time. We're doing some real-time news analysis. We're having some fun. We're getting some good ideas from our chat. Come check it out, y'all. Let's wrap here for pre-market prep this week, folks. Good week here in YouTube land. We'll be back on Tuesday next week. U.S. stocks are closed. A reminder again on Monday for the MLK Day. Have a great long weekend, everyone.